Hello, hello, hello. How's it going, everybody? Welcome to a capital-hungry New York scalping and analysis session that we'll be doing through these North American session hours. If you are new here, welcome. Please take a second to read through the YouTube description. If you are returning, I appreciate the support. You guys come in to view the stream. Okay, so seems like everything's good with the audio and visuals here. So let's just get started right into it. Welcome to the Capital Hungry New York scalping stream. It is currently around 7:30 a.m. Eastern, Wednesday, February 2nd, starting the new monthly period as we've had some very strong movement the prior week. We're going to be doing some analysis on the markets on gold, GJ, GBP USD, Euro USD, USD CAD and US 30, laying out some potential scalp trade ideas we're going to be waiting for as we use the North American session volume to potentially play the smaller pip ranges, smaller time frames, and zoom in to take some very nice scalps if we get the confirms lining up and rules and criteria met that we need to take the scalp. Okay, so before we jump into it, let's just get through the nitty gritty. This is not direct financial advice, but after I go through the process of talking about the fundamentals, technicals, and trade ideas, feel free to ask questions about markets overall and feel free to send any chart links. I can review those trades, analysis, or trade setups you're looking at. Don't spam the chat just asking for direct signals or spamming some like mindless retard shit like GJ melting, GJ rocketing up. Like just leave that to yourself, you know what I mean? You might have a huge urge to type that into a public YouTube chat that you see GJ going down a little bit, but just keep yourself contained, keep those comments to yourself. All right? Any questions about the Capital Hungry private service, just go to capitalhungry.com or message me on Telegram. You also have tons of Capital Hungry resources for free that are linked in the description and in various spots on your screen right now. From the free Telegram analysis channel, free newsfeed Twitter, this YouTube channel itself, and a bunch of more resources that are shared. Okay? Now, everybody remember, all of us here are manual retail traders. We're not institutional bank traders. We're not market whales yet. You know, we all have the potential to be, but we're not market whales, right? We're not long-term investors or bankers by any means. So we have to understand that we have access to certain resources and tools that we can use to our advantage, but at the end of the day, there is always room for error and a high probability for error due to human emotions, inefficiencies, and weaknesses. So don't forget, yes, you have to have a great understanding of the market overall, whether you're a technical only trader or a fundamental only trader, or you trade both. Maybe you trade fundamentals and technicals. Doesn't matter to me. You could have the best technical skills but still have bad psychology and end up a failure. You could have great fundamental analysis and technical analysis and overall charting skills, but if your emotions are not in check, if your risk management and psychology is not in check, you are still going to end up a failure. So what I'm trying to say is, regardless of what your trading style and system is, that's not really the issue. Any trading style, any trading system with proper back testing, and if it has a win rate of at least 50% and you stick to a risk versus reward ratio of at least 1 to 2 or 1 to 3 risk versus reward, then with consistency and discipline, it can be a profitable strategy. The biggest factor for people failing in the financial markets and trading are human inefficiencies and weaknesses that already naturally occur within us that the market is designed to target and exploit, such as greed, emotions of vengefulness and anger, right? When you get too much of a dopamine hit and you never want to stop trading in the over trading, the greed factor when you're over leveraging, the anger, sadness, or emotional negative factor when you take a loss and you don't know how to handle it, right? All the psychology concepts in trading is where people really fail. It's not their system or style or analysis, it's the psychology. So stay smart, follow your trading plan, follow your risk management plan, focus on the long-term vision, and this is the best way to keep emotions out and avoid crashing your account. The name of the game first time in trading, like the first thing you should be focusing on trading is survival. Not trying to profit right away. First learning the game and learning how to survive in the markets. That doesn't mean that every month, every week, you're depositing a new account, waiting for your job paycheck like I used to do. That's not survival. That's called being a retard, being an addict. Like when I first started, the 2 years when I was failing, and I was every other week, like when I'd get my bi-weekly paycheck from my full-time job, half of it would just go into the markets, right? That's not surviving the markets. Every week or month you're depositing an account, then you crash it again, you run it up a little bit, you make a little bit of profit, crash it again. That's not survival. That's called the market dominating you. That's losing overall, right? And we've all been there. Some of us are still there. I was there. I'm just sharing my personal experience, right? First of all, survival is learning how to prevent loss, protect your capital, not be depositing every single other week and every single month. First, learn to do that. How to just survive in the markets, protect your capital, maintain it, then worry about profiting after. You know what I mean? So I'm just saying this because usually when I'm doing these streams, it's to the whole retail trading community or the little bit of influence I have, and maybe like a few hundred people show up here and there, and people are all at different levels of their trading journey, right? But the majority of us have gone through this process or are going through this process where your psychology is just dog shit. And it doesn't matter how much you learn fundamentally. It doesn't matter whose stream you follow, because you cannot control your greed or vengeful thoughts or anger, or you cannot control yourself and pick and choose effective times to trade. Some days the market's ranging and the conditions aren't good. It's best to stay out of a position. Some days the best position is no position at all. Sitting on your hands saying, you know what? Today isn't the best conditions for a trade. I'm not feeling as confident. My confirms aren't there. Why am I forcing anything in these conditions? And then you take advantage when the market is trending for you. You do have those confirms there and so forth, right? So anyways, always good to give those little reminders. Doesn't hurt. We're going to be here for a couple of hours, so why not give these points and tips? Okay, so recent fundamental points. So we're starting a new monthly period. This is going to make a lot of sense on why we're seeing some consolidations, why we're seeing some pullback phases against the current trend that was set from last week. Last week, the Federal Reserve brought a more hawkish tone towards economic recovery. I talked about this in the Monday market update webinar, if you guys got a chance to watch that, and even on this quick YouTube gold short. It was a 60-second video of some gold analysis that actually played out overnight so far, and we're going to be seeing if we can extend that to better sell points. But anyways, last week the Feds brought a more hawkish tone towards economic recovery and potential future rate hikes. They talked about combating inflation, multiple rate hikes to come this year, the labor market being a lot stronger, the overall US economy being stronger than previous years, thanks to the support they gave. And over the course of the last 2 years, we've seen dealing with this pandemic. And the US hasn't been in a lockdown for a long period of time, ever since the initial pandemic lockdown. So there really hasn't been any reason for UK data to be decreasing as they've been out of lockdown, right? But anyways, when the Feds brought that more hawkish tone, it led to a direct bullish move and strength in the US dollar and weakness in gold. This is because smart money is worried about the economic stability to come post rate hikes. Majority of the market makers, majority of the smart money investors are very well aware that asset classes within the financial market, such as the stock market, the housing market in North America, even gold, right? The reasons why it was so bullish at the time 2 years ago was lower prices at the time, low interest rates, increasing inflation, which inflates the price of everything within an economy, and investors pooling in, riding that wave. But now, 2 years later, you have gold, the housing market, stock market at very high prices. You're either at historical highs or new all-time record highs. You're having the tide shift where we're going to start seeing higher interest rates, and those higher interest rates and tapering of stimulus is going to combat and bring down inflation. So you have the opposite factors of what kept the stock market so bullish and gold so bullish starting to come in, which led to a bearish move short term on gold and a bearish move as well on the equity markets down to demand zone lows and strength in the US dollar. Okay, so what we can see here when you're looking at gold is that week gold had a very bearish impulsive move, sellers in control, that brought us all the way down to the specific price sensitivity zone around the 1780s to close off the month of January, right? Now we're seeing a bit of an upside move from 1790s, but when we're looking and understanding the market timing, this makes sense. You're having a pullback to set up the seller's order flow for the new month, which could easily come up to like 1812s before seeing more sellers jump in from better price points and continuing our way down. What we have had happen so far is the Federal Reserve brought a hawkish tone that led to its bearish impact after there was not enough buy orders to break above 1850 highs, which I also discussed in a gold webinar prior weeks. Okay, so the Feds bring a more hawkish tone. The following day after and going into closing the week and month, we continue with very strong intraday bearish price action and do a very large $50 an ounce or 500 pip run from the 1830s down to pretty much the 1780s. We peaked that low point, right? Then as we're closing off the month, we see the sellers that extended in those positions, as every single candle has billions and billions of dollars moving through it, whether it's a minute candle or whether it's hourly candles, doesn't matter. You see them after extending that downside move with that fundamental catalyst to close off the month, liquidate some positions and exit some positions, and for the start of the new month, this is creating this now pullback phase. Okay, when you're zooming in further, you can see we have a few areas of interest in mind. One is obviously the lows that were printed at 1780s, and of course that being that previous price sensitivity zone where we've seen a lot of respect on the higher time frame, both on the bullish and bearish side, like I was just showing you to the left. I can at least see us starting to revisit these lows after getting a deeper pullback to collect more sell orders. Two, we had a huge impulsive sell-off move over the course of the second half of last week due to the fundamental reasons stated. So even if we came up to 1812s, 1815s, and retested previous price sensitivity areas before continuing down, that upside move would still only be a 50% correction or a 50% retracement of the overall seller's impulsive moves. And what you can also see so far is that the seller's candles and bearish candles were extremely large, volatile and impulsive. You had large movement on the intradays with very minimal pullbacks and continuations to the downside, compared to some of this pullback bullish structure where you don't have the largest, strongest bullish candles canceling out the previous bearish candles. You have some slower pullback structure here accordingly that's slowly making its way up to better sell points to retest those sell points before driving down back to these lows. Because what I still see is that we're just starting off the new month. We're just setting up the order flow for the new month. And what investors are waiting for is more information to supplement or complement the Federal Reserve hawkish tone. So what that means is this week, if you guys have checked out, and I'll show you on the economic events report as well, this week, later in the week, we also have US labor market data, right? And we have Bank of England rate decision as well. So we want to see if Bank of England follows a similar tone to the Feds and are more hawkish in terms of looking at more aggressive rate hikes, even hiking rates again, which would obviously be having an impact on combating increasing global inflation. And I also want to see if the labor market data this week, the non-farm payroll, the wages information, and the unemployment rate is also good. If this information follows suit, we could have a pullback to 1812s, 1813s area up until those days, and then continue right back down bearish with a stronger labor market and more hawkish other central banks, as that would still be strength for the US dollar and weakness on gold. But anyways, that's just some more macro analysis. For the time being, I can still see, as we're respecting some of this corrective pullback structure, that gold can still make its way to 1812s before coming back down. So what I'm going to be looking for in terms of scalp and trade ideas today is buys from 1803, buys from 1809, sells at 1812, 1814 area, or sells back below 1795. I just wanted to explain the ideology that I'm still in a overall bearish bias on gold with the fundamentals stated, the higher time frame structure, and the bearish price action. I can just see this pullback extend a little bit higher, which as scalpers will give us some short-term buys to set up the better sells with the overall fundamental bias and obviously sellers in control there. Does that make sense for everybody on gold analysis, the fundamentals behind it, the technicals as well? Let me get some yes or no's in the chat quick. I think Raja's streaming today, so we're probably not going to get that many viewers today, but that's all good. I don't mind. Okay, so in 9 minutes, the New York session will be opening up. I'm going to be looking to see if we get a minor lower wick pullback, right? Then buys above 1803, starting to target these better sell areas. Or if we just start to reject current price points and don't get the buys at 1803, then just sells from 1795. Okay? Now, I forgot to talk about that we have NY open, of course, in 9 more minutes, but we do have some economic data on the docket today. At 15 minutes into New York Open, at 8:15 a.m. Eastern, we have the ADP national employment, where they're expecting an extremely large drop from the prior number. For those of you who don't know, the ADP National Employment Report is like a warm-up to the NFP report. The non-farm payroll is actually the collection of overall jobs data within the US economy, right? But the ADP National Employment, like it says in the title here, is from private employment sector, okay? So it doesn't give you a full reading of the actual non-farm payrolls or employment statistics, but it gives an estimate within the private sector that helps investors gauge what the NFP can potentially be. That's the whole reason for it, like how investors use it and so forth, right? But what I want to tell you guys from my experience is usually the ADP is not a good indicator of the NFP at all. That comes the following Friday. The ADP and NFP can be completely different numbers. So don't really use the ADP as a signal towards what the actual NFP figures can be. Keep them separate, okay? But anyways, today, our main focus through our New York session, at 8:15, we have ADP national employment, where they're expecting a very aggressive drop in the jobs data. If it's well below 800 and also below 207, this can help us induce that pullback on gold to still have us go retest the better sell points, but give us that push up to the 1810s and 1812s. Also, with Canadian dollar, they're expecting very poor building permits data as well. Both of these are medium-term reports, but they will have lower time frame impact on US dollar pairs, Canadian dollar pairs, and so forth. And that's at 8:15 and 8:30. After that, it's pretty quiet. Today's a pretty quiet New York session. That's something else I want to talk about, and that I just reminded myself. So, as manual retail traders, we have to focus on the technicals, the fundamentals, if you wish, if you want to add that to your trading arsenal and have more confidence and knowledge of what's going on, right? We have to focus on the fundamentals, technicals, psychology, which involves your emotions and risk management. But something else that people neglect is adapting to market timing and market environments. We also have to stay extremely adaptive, okay? What have you noticed in terms of volume and volatility for the start of this week so far compared to last week? Have you all noticed it's been a bit slower volume, slower volatility, less movement overall, a lot more pullbacks, corrections, or consolidations you've seen? Right? This isn't random. This is because we had very aggressive moves with the Federal Reserve interest rate decision last week. Those moves get priced in, and we're starting out a new month, right? As we're starting out a new month, the majority of economic data this week, the stronger economic data, is later in the week, if you guys can see this. Like the Bank of England rate decision is tomorrow. Initial jobless claims, non-manufacturing orders, and factory orders for the US, that's tomorrow. NFP and stuff to close off the week here, that's on Friday, right? So a lot of the PMI figures, retail sales for Euro, industrial data for Euro, market PMI and industrial data for the US, Bank of England rate decision, or Bank of England bank rate, yep, ECB deposit rate, all of this stuff has been in the second half of this week to come, Wednesday onward, right? So today you can see we really just have ADP and this Canadian dollar data, and overall news headlines have been quiet, and I'll talk about that in a second as well because we have time, right? So I'll go through all this information for everybody. So news headlines have been quiet. A lot of that information's been priced in. For those of you who don't know, there's still tensions going on with Ukraine and Russia, but it has not escalated into hard war yet. It has not had a market impact yet. Boris Johnson is getting in some shit regarding the parties he was having during COVID lockdowns, but it's not having an impact on GBP. It's just funny, right? There's no lockdown or Omicron fear, right? Because a lot of that has been priced in. Investors have been really following just the movement of central bank policy positioning and so forth, all right? So remember, today, just in terms of volume and volatility, don't have high expectations. This is a great tip that I learned throughout my trading career that actually helped me save a lot of money in losses and also pick and choose better times to trade. Let me break down something psychologically for all of you, right? As manual retail traders and as scalpers or day traders, it's very easy to get distracted day in and day out as you're so involved in the charts, involved in the session, and involved in the lower time frames, right? So for example, 1 week or 1 day, you might have extremely strong volume and volatility and take some winning trades those days. That's perfect. That's great. But what happens is people don't emotionally neutralize themselves or reset their perception on the markets. So what happens is they come in the next day or the next week with the same expectations of having great volume and volatility. And when the market is ranging, they end up getting frustrated, stressed, angry, and fighting the market when it's pulling back or ranging and burning through their profit and burning through their capital. Tell me right now on your life that you haven't been in that exact situation. I know I've been there before, where some days the volume and volatility is great. You take some winning trades, you get that dopamine hit, you feel very proud, you feel very confident. You come into the next day expecting the same conditions. The conditions aren't there. The market is slower. You end up still fighting the ranging market, and then you burn your capital. You burn your profits from the previous day, and you burn your capital. I think we've all been there before, right? So this is the tip that I've learned to start combating against that. Over the course of the last 2 years, all of these various psychological errors, I've been trying to find solutions for them to help reprogram my brain, okay? Now, listen. Every single day before you trade, come into the markets with a more pessimistic outlook. Please listen to this. This doesn't mean come into the markets thinking you're going to lose. This doesn't mean come into the markets thinking you're not going to take a trade. I mean, with the market conditions, expect the worst. Expect that you're going to range. Expect that volume and volatility is going to be very low and slow. Expect that you're going to be watching price and it's going to be moving like a snail. Expect a lot of pullbacks and whipsaws that can come retest your entry again and still revisit your area before continuing with your main trend. Have these expectations of worse volume, worse volatility, and expecting ranging markets, because more times than not, that is what's going to be happening, right? If you were to go back test market movement on something like, let's just say, look, let me show you guys a great example visually right here now, right? Let me show you guys on gold. I'm going to mark off the consolidation or pullback moves when gold is pullback in a consolidation or pullback phase in yellow, and I'll mark out the impulsive moves in blue. This is over the course from May 2021 to now. You can see the timeline here, right? You can see some of these consolidation phases on gold, which are very easy to identify, whether you're trending bullish or bearish, can last a period of days or weeks, okay? Now, when you're looking at overall market structure movement, what's more common and what lasts longer? The impulsive moves and big money making moves, or the consolidation phases, right? You have to remember, the impulsive move might look large, but the impulsive moves, whether you're going bullish or bearish, they happen within a day or two, right? Like the sell-off we saw on gold last week was within 2 daily candles, and you dropped 500 pips. These consolidation phases, right, you have to understand can last weeks, can last a month long. So as a retail trader, as a scalper or day trader, what conditions would be more common for you to be a part of, probability wise, if you're just looking at gold? If you're looking at gold over the stretch of a year, it's a higher probability that you're trading consolidations more than you're trading a trending market with impulsive moves. So that's why you should come in ahead of time, understanding there's a higher probability you're going to be trading some type of larger consolidation or pullback structure or corrective market phase rather than the impulsive moves with the trend, whether it's bullish or bearish. Does that make sense to everybody? So you have to adjust and reprogram your mindset that when you come into trade, come with the worst expectations. And this is absolutely amazing because when the market is ranging or slower, you're already expecting that. You're already ready for that. You're already adapted to that. But on the flip side, when the market is giving cleaner volumes and higher volatility, that's a bonus for you. That's a beautiful, extra blessed, profitable day for you. You had great volume and volatility. Your trades played out even faster. Very clean cut, easy to read moves. That's a bonus. Do you understand what I'm saying with that psychological reprogramming? This helps you to avoid greed. This helps you to keep realistic expectations and a perception of the markets. This helps you to stay grounded. This also helps you to stick focusing on your trading plan and long-term vision. Right? Let me show you guys another example. This is just with gold. And New York just opened up. After I give you guys this example, I'll go through analysis that what I see for scalps on GJ, so forth, and what I mean there. Okay? Let's look at GJ here and zoom out. Even when you're trending more bullish here, look at some of these consolidation phases as you're making your way to the upside or downside. How could you expect that? By expecting it. You've already expected that you could have higher volume and volatility in great conditions every time you trade, and that ends up burning you. Now you just have the expectations of not seeing those great conditions because that's what the probability is showing you. In terms of how you can expect stronger volume and volatility, if that's what you're asking, that's going to come with experience and a better understanding of the fundamentals and market timing. For example, any private channel member will tell you that during the FOMC week, we were taking it slow and steady, but after the Fed gave their sentiment, we hammered the gold sells, expecting strong volatility, expecting it to drop every single day, all the way until the end of the month, right? Because we understood the fundamentals that were in play, and so forth. That hodl or die just gave a great analogy. It's like playing baseball and going up to bat. You can't expect to get a home run every time you're up. You can have the expectations of getting a hit, of getting some bases, right? But you can't expect a home run every single time. That's not probable. That's not realistic. You're going to do your best job possible to hit the ball as well as you can, like you should every single time. But you shouldn't have these optimistic expectations all the time, especially when you're trading vicious financial markets where 90% of people primarily lose. Even some of this movement, very corrective, very slow, consolidating in these areas, right? More times than not, what do you see even when you're trending bullish? What scenarios are you going to have a higher probability of being in? The consolidation and corrective phases or the impulsive moves with trend? Right? You can see based on the timeline, there's a higher probability as a scalper or day trader, you're going to be facing a GJ consolidation or pullback, right? Even right now, when you're looking at the hourly time frame, look at GJ structure here. It's been making its way up, but look how aggressive this consolidation on its way up is. Look how, compared to the sellers moves we had the prior week, look at the difference in volume and volatility, right? This is how you measure the difference in volume. When you have high volume, high volatility, this was when we saw the sell-off in equity markets. You can see a 250 pip drop, right, in 4 days. To have that same 250 pip upside now has taken almost double the time, 8 days of this slower structure, right? So anyways, now let's give out, now that it's New York Open, I want to give out the trade ideas on these other pairs. But before we do that, let's just talk about our US dollar pairs analysis quick over the next 7 minutes before we watch the ADP national employment data release, okay? So gold, I would still be looking for gold buys. When you're looking at the 1 minute time frame here, we can see we had a little bit of an order block that we broke out of and are still holding some bulls. I'd be looking for a little bit of a spike down, holding 1803 and taking the buy scalps if we have that liquidity grab, hold above 1803 and to revisit these price points on the 1 minute time frame for 20, 30 pip scalps with the expectations of poor ADP data to come. So we'll see if that works out. Now, US dollar overnight, Japanese yen is still fundamentally bearish, just showing some strength from its lows. The volatility index in bearish as equity markets grabbed up those dips that were caused by the initial fear, uncertainty, and doubt, and they're starting out the new month setting up their order flow to profit take from the upside there, right? And the dollar for the new month is just doing a pullback to retest better price points of interest as the dollar is still higher time frame bullish and fundamentally bullish, just grabbing some liquidity to set up the new month. But for the time being, what we have been playing as per the market update webinar as well that was sent on Monday for free to the community is some dollar weakness and pullback structure. We've been playing some of this bullish pullback structure here on GJ with that yen weakness. We've been playing some of these GU buys from 1.34 accordingly and playing some of this pullback structure on the dollar weakness. We've been playing some of these Euro USD pullback buys into this consolidation zone. Again, start of the new month in dollar weakness. We're looking to extend that same bias for the time being. And what I'm looking at on GU is pullback to 355 buy scalps. On Euro USD, pullbacks to 1.3100 or 1.2800 buy scalps. And on USD CAD, as I'm still expecting a bit of short-term weakness, I would sell USD CAD, but we also have some Canadian dollar data, which is also expected to be weak. I would only sell UCAD below 2.6. Otherwise, I'm still looking at 1.265 and 1.27 as buy areas of interest. On GBPJPY, you can see price action has been very slow, corrective in terms of the movement, but we're still respecting that weakness in the Japanese yen. Bullish intraday structure here with also strength in the UK equity markets. We just need to clear above these previous intraday highs and see some very easy buys from 155.2. But even if we got pullbacks to 0.800 buys, 155 buys, and 0.200, I'd be looking for buys. Now, I'll talk about the technicals and the price action and market structure on those pairs again in more detail about those trade ideas and what to look for on the lower time frame and what to expect on US 30. But I just want to see this ADP report release and the impact it's going to have on gold and US dollar right now, as well as the data report release, as it's just in 2 more minutes right here. So we might as well watch that together and look at the impact. The US dollar is just a bit, so you have to look at and understand market waves, okay? Zoom out and look at the structure of the US dollar. When you're saying the US dollar is weak, right? You're looking at this right here, which is a pullback that's happening for the start of the new month. But ask yourself some questions when you're looking at US dollar overall. What is the overall trend on the US dollar from the start of 2021 when we had this double bottom created, failure to break the 89 higher time frame demand zone price point, and then had the Feds start to talk about tapering, start to talk about interest rate hikes, combating inflation and so forth? What has the overall trend been on the dollar? Bullish, right? Every time you see a bearish phase on the dollar, because the market moves in waves, you have buyers enter the market, extend into intraday highs. Those buyers take profit. Sellers jump in hand to relieve them out. This creates these pullback phases. Every time you've had these pullback phases, where does it come from? It's conveniently at a new intraday high or a previous intraday high, correct? Also, these pullback phases are also conveniently at the end of the month period or start of the new month period. Here you have end of June, start of July, end of July, start of August, end of August, start of September, end of October, start of November, end of December, start of 2021, or end of November, start of December, end of January, start of February. Yes, we are expecting ADP to be bad and potentially lead to some continued bears on the dollar, which dollar could easily come dig a bit deeper and still be respecting higher time frame bullish market structure. So when the US dollar right now is bearish in the short term, it's just profit taking by buyers from a new intraday high, right? And buyers taking profit, creating that pullback phase. Do you understand what I'm saying? So Salim, the dollar is just bearish in a short-term pullback as buyers take profit to set up the order flow for the new monthly period. Okay? Overall, dollar's bullish. We just playing some short-term pullback bears. Okay, gold did exactly what I told you guys at 1803. Anybody take that buy scalp? Anybody take the 1803 news trade we called? 30 pips easily right there. Minus 301k, terrible ADP, retest of 1803 on the dot. Upside move. It does not get better than that. We pre-planned it. We called it ahead of time. 1803 1 minute retest on the dot. Expected terrible jobs data. Boom, 50 pips. Now, remember, we are scalping and day trading. Secure a majority of your positions. Okay? Secure a majority of your positions. Let's see if I can find it right here. We were just talking about it. Boom! Doesn't get much sweeter than that. Shit, man. The frick is this? Where the fuck am I? Boom. 1803. We had the little pullback there. Hold above 1803. Buy scalps to the upside. Even went to the exact target stated. Yellow lines ahead of time. Analysis ahead of time. Exact entry points. 50 pips closed impulsively in 2 minutes with the poor economic data. Just go back 8 minutes from current time. Everybody, you can see each other here. Everybody can see in the chat. Hello. Inception right now. Now you can see a heavy whipsaw and pullback, which is completely normal as it's a news style trade we executed on. But you can't go wrong as a scalper or day trader getting 50 pips in 2 minutes with easy potential to close a bit earlier than that as well. No, I'm coming back trading next week. I took a little break after having a very, very strong prior month. What's this? I shared this in the free Telegram analysis channel as well. My wins and losses from the previous month. I made $70,000 in profit over the previous 30-day run. I had about a 50% win rate on trades. These were all the losses here. These were all the wins here. You can see all the positions, stop losses, all the information. Right? But overall, my wins were double, triple, quadruple the sizes of my losses. And my losses were controlled and kept small. Nice catch, Jonathan. Great job. Yeah, if you guys want to send me the trade you took and caught, that's my Telegram there if you want to send it. Sure. Go ahead. Okay, so US dollar is doing what we expected so far. Terrible ADP data. Sorry, just gonna fire this off here for the chat. They're trying to blame Omicron for the bad ADP, but it's not like they were locked down anyways. No, people were just entering manually at the 1803 area. You could have even entered on the retest here for the 15-20 pips, but see, people just entered. Yeah, but that style of trade is an impulsive trade using the news, volume, and volatility. You know what I mean? Oh, wow. You had a great entry. Hello, sir. Add me in your signal chat. Bro, it says you're a professional trader yourself. Add me in your chat. This guy, Trade with MK Official, professional Forex and crypto trader. Send me your signals. Oh, wow. Bro, what a close. Wow, what a peak close. What a peak entry and peak close. Wow. $18.03 key level's a little cheat code, eh? Yeah, you still could have took the same scalp here. That's still almost 27 pips right there with the retest. We still held the same analysis, same bias. You know what I mean? It just got a little bit messier. Bro, please what? This guy's saying you are king. Thank you. People are weird, man. Damn. TikTokers might be catching some L's. Oh, can you guys see this full headline? Let me move this up a little bit. Biden is going to be increasing some security risks from apps like TikTok and other foreign-owned apps. All right, everybody. So this trade is done. The gold trade, we pre-planned it. We called it ahead of time. We drew out the magic yellow lines, exact price points of interest. We expected the terrible dog shit ADP data. All right. That trade's done. We can see if we get another setup again, the new 30-minute candle, but you either got 50 pips with the impulsive move or 25 pips with the retest. This here was the news impulsive move. This here was the retest that went up 20-25 pips as well. Now we're just ranging on the lower time frame as we obviously have slower volume and volatility still. And remember, like I told all of you, right? We could easily still have gold pull back, range, continue back to the upside before making our way down overall. Okay? So remember, ADP is a medium-term report. It's not high impacting. So ADP is a medium-term report. It's not that high impacting. We didn't expect anything huge from it. Investors made their money, billions of dollars in those singular minute candles that pumped up 50 pips. We had a quick retest, another 20 pip bounce. Now we're in no man's land with very indecisive price action. No more entries at the moment. No further expectations until NYSE volume as well. Okay, now GJ. I still see some GJ buys if we can break above 155.200. You can see on the intraday time frames and also on the lower time frame, when you're looking at the price action, you can see a lot of struggle by buyers at this exact price point of interest to fail to break higher. Okay? So I'm looking for 1 minute closures above 155.2 for the breakout style, or the breakout retest buys above 155.2. Right now, GJ is in a very, very messy lower time frame range where it's rejecting both breaking to the downside and breaking to the upside. Okay? So as soon as you start to see GJ break above 0.200, where it's also exact 1 minute rejections here, as soon as you start to close above this area, what we can validate is more buy orders entering the market, sellers still failing to break any lower, and having enough volume to now have an impulsive move to break above these previous minor highs. Okay? This guy said USD rose. USD rose? Sorry, autist? I'm not sure if you're asking a question. I'm not sure if you're just making a statement. But we're playing the short-term USD bears at the moment. Unless you're talking about this. It looks like somebody got fucked by that gold trade. And they were trying to sell. It looks like they're trying to go against the stream. But we're just playing some of the short-term bears. Alright? Yeah, USD. I don't know where you saw USD rise over here. USD pretty bearish. Pretty bearish. Okay? GBP USD, I'm looking for retests of 1.3545 buys. No, I don't think ADP is enough to have us go up to 1812. Maybe the NFP at the end of the week being very bad as well can have us have gold retest 1812s. I don't think we're going to see enough volume and volatility for gold to break out much higher today. That little move we got on gold, that 50 pip impulsive move and the 30 pip retest bounce, like I'm not expecting much more than that, especially over the next hour, as we've already had North American session open and didn't see too much volume and volatility, and the impact from the ADP report was pretty minor. It gave us that quick squeeze. The data was terrible. Our data prediction was right. Our impact expectation was right. Our trade ideas for 1803 buys were right. Our expectations of lower volume and volatility was also right. We can't let that dopamine hit change our views now. You know what I mean? So let's slow down right now, everybody. Let's take a second to breathe. Let's break down what just happened psychologically, okay? We pre-planned some trade analysis and we pre-planned what to expect with the news and the move on gold. We called the gold buys from 1803 and expected poor economic data. We're doing this as a group right now. You're not alone. We're feeling like we're a community right now, trading with our friends, trading with our other trading comrades, right? You took the trade and the analysis played out. You feel this dopamine hit from taking the profit, from making the money. You check the chat, everybody else is cheering. Jeeves happy, the chat is happy, everybody's feeling excited and great right now. This is where you have to slap yourself in the back of the head and emotionally neutralize yourself and go, okay, this is nothing but another day in the markets. Another day, another dollar. Same shit, different day. Because if you let all that dopamine hit, if you let all that excitement, if you let all that energy take over your brain right now, you're going to stop making logical decisions and you're going to make a retard move. You're either going to get greedy and overtrade and try to jump in something again. You're going to want to take another trade as fast as you can. Or if you miss the trade, You're feeling FOMO because you're looking at everybody else make money. You just saw people send me the profit they made. You see everybody cheering in the chat. You're feeling left out. Fuck those emotions. Whether you have FOMO and you're feeling left out, fuck that. The gold, let's be realistic right now. Yes, the move was great. Yes, the analysis was great, right? But what gold did right now, when you're zooming out and looking at the hindsight movement, was this little yellow box. Do you understand what I'm seeing? For you to think realistically and look at the markets from an objective, logical standpoint, to get FOMO over this little yellow box, to get overly excited over this little yellow box, it's not practical, is it? It's not normal. That's not useful, is it? Even if you caught these great sells the previous week, that's perfectly normal. It happens a lot on gold. It happens every couple of months, actually. There's no point having fear of missing out as a scalper. There's no point getting greedy or looking to overtrade when you're trading gold. When these opportunities are there every single day, every single session. Okay? So just remember that. It's very easy to overlook the psychology because the psychology is all subconscious. How you feel, how your emotions are impacting your decision-making process, it's all subconscious. As you're getting excited, as you took that winning trade, as you're feeling excited with the group, you're feeling happy during the stream right now, you don't even understand that subconsciously your decisions are starting to get shifted. You don't even understand that you're starting to get a little bit more greedy, that you want to take another trade, that you want to feel that dopamine hit one more time. Your brain's thought-making process is starting to go from objective to more subjective. You don't want to be subjective in the markets. You want to stay as objective as possible. Trade what you see right in front of you. Stay adaptive to the conditions. Focus on the risk management, the long-term goals and long-term vision. Does that make sense for everybody? So just as much as people focus on when you take a loss that you shouldn't revenge trade, it's also the same thing of managing your emotions when you take a win. When you take a win, you shouldn't get overly excited. You shouldn't be fucking jumping for joy. It's just another day in the markets. It's another day in the office. Right? We have to learn to emotionally neutralize ourselves at all times. Okay? Okay, now, GJ starting to show us some life above 0.200 here. What I want to make sure right now to validate the 0.200 buys is we're showing some bullish price action above the previous highs. That's perfectly fine. We're starting to get a little bit of a breakout here. That's perfectly fine. What I want to confirm is that we don't engulf these bullish breakout area candles, and all we do right now is dig a little bit deeper, retest, then collect more buy orders and start chugging our way to the upside for buys up to 0.300 and 0.35. So right now, don't take entries yet. Wait for the reaction here, the minor retest. If we fail to break back below and then we come back above 0.200, start to look for the entries in this area, confirming the retest and failure back below. I don't want to see these bullish candles on the 1 minute time frame get engulfed or canceled out. If we start to break back below and this candle closes bearish right now, don't take any buy trades yet. The buy setup is not validated yet. We can't confirm enough buy orders in the market just yet. We just had this minor breakout move, but not enough order flow to hold above 0.200 just yet. Okay? So right now, we had the minor breakout. No continuation to take the buys yet, so don't rush that. We will need to come back above 0.200 to take the buys. Okay? We're still digging in this area, had a nice little move, but still rejecting that area for the time being. So no confirms there just yet. GBP/USD, the buys are already active, so no point trying to jump in right now. It's best to wait for the pullbacks and continuations. UCAD, you can see even with the poor ADP data, still didn't break our high risk, high reward buy area here. So far, all we had to execute on with good price action confirms were the impulsive buys for 50 pips and the retest buys on gold for 27 pips. Nothing yet on GJ or the other pairs, okay? GJ will be good if it comes back above 0.200. GU, we're waiting for these retests. Oh yeah, I forgot to give US 30 analysis. So US 30, we can see the higher time frames are bullish, but as we had these all-time highs printed by buyers, and for the start of the new fiscal year period, 2022, we can see as we were getting the fear of interest rate hikes to come, we had some profit taking by buyers and liquidating of positions and massive sell-off that led us all the way down to this higher time frame demand zone around 33,500. Now, as we reach inevitable rate hikes and as inflation starts to get combated and come down, I do see that we could possibly peak a bit higher into these all-time high regions again, but that's just going to be an area of interest for buyers to profit take out of the market and start to see a corrective bear market form over the course of the next months to start revisiting 32,000, 31,000 previous pandemic high price points. But for the time being right now, what we can see for the new month is buyers trying to squeeze out as much as they possibly can out of the stock market and these other asset classes. Yes, that's a great question, Nicholas. And yes, when you're dissecting the buyers and sellers pressure and those characteristics that I state on the 1 minute time frame, the same concepts can be used on any time frame, except you're obviously just adapting to those larger time frames. Like instead of waiting for the 1 minute candles to close and the patterns that are forming and what the 1 minute's telling you, instead you might be applying the same concepts, but you're waiting for the 30-minute candles and the patterns there and what it's telling you about buyers and sellers pressure. But 100% correct in what you said. It's all the same, just the only difference is the time sensitivity itself. You know what I mean? But the way I read the time frames, read price action, read market structure is exactly the same on all time frames. It's no different at all. You know what I mean? So good question there. Okay, so from this demand zone, even anytime we've had aggressive pullbacks from this area, we've always revisited this area and still failed to break and continued overall bullish. I don't expect us to go into new all-time highs, but what I do expect to see at least is possible revisitation of 36,000 before seeing profit taking by buyers and continuing right back down again. Okay? So what I would like to see on US 30 is still playing some of these short-term pullback buys to revisit these areas of interest. Now, I could see some rejection from 35,600 area, but even if we came down to 35K, 35,200, or breaks above 35,400, I'd still be looking for buys to target these price sensitivity areas. As we can see, the price action is very bullish, very strong support to that demand zone, order block of buy orders collected in this area, and strong bullish price action from that area so far. Okay, so I would be looking for buys from 35K, 35,200, and 35,400. If you all don't mind right now, just give me a 5-minute breather. I just really have to go to the washroom. I've been holding in this piss my bladder about to explode for like the last 35 minutes because I didn't want to miss out on the gold setup and stuff like that. So just give me a few minutes here. I'll be right back. Okay, sorry about that. Just had to take a quick piss break there. All right, so gold had some nice moves. Now just ranging, possibly doing deeper pullbacks, but it is what it is. Okay, GJ now. GJ now, I want to confirm that we still have the same thing. We did what I was talking about. We did that little pullback. This is the new 15-minute candle now. Just wanted to make its lower wick, start continuing bullish and breaking above these 1-minute highs to give us that possible continuation squeeze. But with this new 15-minute candle, we could easily make a bit of a lower wick here again, double bottom, before continuing up a bit further bullish. Also keep in mind, we have the 4-hour candles closing and approaching NYSE shortly as well. So GJ looking like it's doing its retest here, showing some more buyers pressure and buyers momentum. Just the new 15-minute candle setting up. But overall, GJ's volume and movement has been pretty low and slow when we've been looking at it overnight. So if this move does play out, expect it to play out very slow and steady, and you're probably going to get 10, 15 pips of profit over like 30, 40 minutes. You know what I mean? So it might even be best to wait for the new 4-hour candle if we don't get the clean price action confirms right now, just because GJ's already been moving pretty slow. All right. Yeah, GBP USD, we're still waiting for the pullback continuation buys. Same thing with Euro USD. We're just waiting for the retest of the key level, 1.31 in this previous 1-minute order block to take those buy scalps. But other than that, that gold move was pretty much it. I'm expecting that New York's going to be slow and steady. I'm expecting majority of sessions to be slow until we get the Bank of England rate decision and then NFP at the end of the week. You know what I mean? Yeah, I can, if you guys want to send me any charts or analysis or trade ideas you want me to look at, you can just send me the TradingView code and I can always review that for you. Yeah, if you want to. I wonder how this whole Ukraine stuff is gonna go. I honestly feel like a real war brewing up. So that's gonna bring some market fear in the near future, some short-term market fear. Because obviously, if the Ukraine stuff heats up, then all these other major country parties are gonna get involved too, like the U.S., Eurozone, right? So I wonder how that's gonna start to heat up. Yeah, Russia's been trying to eradicate Ukraine forever. Like since the Joseph Stalin days. You know what I mean? They've been trying to make that land all Russia for forever. Yeah, I was reading that as well, that they already have camps, hospitals, and other military equipment and material set up right around. Ukraine's the one warmongering? I think there's some conflict going on. I don't think it's fake news. There's been conflict between Ukraine and Russia throughout their entire history. Russia's literally done assassination attempts on Ukrainian presidents. Russia's tried to put in their own president within Ukrainian leadership before, and they've done it and it's worked out. You know what I mean? Yeah, Putin wants that. Yeah, Nord Stream, Putin wants that energy money for sure. 100% he wants that. Every major global power, whether we like to admit it or not just Russia, not just Ukraine, not just China, every major power, right, really wants to go to war. War is an extremely profitable racket, right? War is an extremely profitable racket at the sacrifice of human life, but we already know the ultra rich and wealthy don't give a flying fuck about the human life. You know what I mean? So at the end of the day, for these military weapon manufacturers, energy companies, for investors, for lobbyists, for the politicians, for the one percenters involved, war is extremely, extremely profitable and lucrative. You know what I mean? Why is war profitable? Well, one, it allows for huge increase in business in the military complex and huge amount of increase in manufacturing and production jobs in military equipment, supplies, weapons, and more, which is all funded by government spending and tax money. So all of this spending on military equipment, on weapons, on the manufacturing, and these contracts that these companies get is all from printed money and taxpayer money. Two, when a country is looking to go to war with another country, it's usually in terms of looking to conquer or take over. They either want to expand their reach of land or expand their amount of control in resources, or even expand different routes. Like, for example, the huge issue with countries wanting to take over Iran is they want control of the oil reserves. They want control over the Strait of Hormuz. You know what I mean? Which is a major path for import and export of oil shipments within the Middle East there. Right? What you also have happen on a business front is majority of these countries that got taken over in the Middle East, whether it's Libya, whether it was Iraq, majority of them wanted to take over US and Saudi oil business. They wanted to sell oil in their own denominated currency. They wanted to sell, like the Venezuelan president dictator, he wanted to sell oil in euro dollars. Iraq, Saddam Hussein, he wanted to sell oil in euro dollars as well as backed by gold. Libya's time, right? He wanted to sell gold backed by an African dinar, an African currency that's backed by gold. They wanted to go against the petrodollar standard. They wanted to go against the US dollar power control. And what happens is they get completely eradicated and wiped out. You have all this mainstream propaganda that gets created to paint them as terrorists. You have all these various plots against them to raid the country and take over, from internal propaganda to external propaganda. And then they raid and take over the country. You know how many millions of dollars in US dollars Saddam Hussein had in pallets of cash? You know how many pallets of gold they had? How many pounds of gold they were hoarding? Libya, Iraq. You know how much access to oil, gold, and resources they had? Extremely rich countries, right? But the other countries get greedy. They don't want to lose their power vacuum. They don't want to lose their power. They don't want to create this power vacuum. So they end up making some fake reasons of why that country is a threat to the freedom of North America, and they end up going to go raid it. And then Euro and North America band together, and they go raid the country. They say it's for freedom. They say it's for protecting the American people, but it's a lie. No, Venezuela didn't become a poor country because the dictator took all the money. Venezuela was a very rich country because of how rich they were in resources. The dictator can't take all the free cash or oil for himself. Yes, he can control a huge amount of it, but the overall value of Venezuela was still extremely high before the sanctions of the US. What started to kill the Venezuelan oil market was US and global sanctions that prevented them from operating business. Right? The dictator himself didn't kill the Venezuelan economy. Yes, having a dictator sucks, but Venezuela was extremely super rich in oil and other resources. But then when you have these major global powers say, hey, we're putting sanctions on your oil. Nobody in the world can buy oil from you. Otherwise, it's going to be a big problem. That will really kill your business on top of inflation, terrible economic setup, and so forth. Do you understand what I'm saying? So with Venezuela, the US and Saudi Arabia, they didn't take an economic stand. With Venezuela, the US didn't take a war stand or a military front. They took an economic front like they did with Iran. Remember when Iran's oil got sanctioned as well by the US and China was having to buy their oil backdoor? Right? That's the same thing going on with Venezuela. They're pretty much, these major countries are stopping any exporting of oil for Venezuela. They're stopping their business activity. Okay? So Venezuela's economy got destroyed by these huge global powers targeting their resources, trying to topple their economy. Because when Venezuela eventually goes bust, who do you think is going to come bail them out in exchange for ownership? Countries like the US, countries like Saudi Arabia, countries like China. What happened with Afghanistan as soon as the Taliban took over? What countries started to go into Afghanistan to start to help them out a little bit? China, Russia, because they want to have ownership of the resources and control there. You know what I mean? But anyways, everybody, I've been streaming for longer than an hour and a half now. GJ's just ranging around 0.200, give or take the plus or minus 5 pips. Gold is just starting to range now. So we went through a full fundamental and technical analysis of the markets, right? We went through trade ideas and fundamentals on gold, GJ, GU, Euro USD, and UCAD. We used the expected poor ADP to take some buys from 1803 up, right? Other than that, no other trade idea is executed. Hopefully everybody enjoys these webinars. They enjoy the content. I'm going to save and upload this, and I'll see you all next time.